Hims and Hers released their latest quarterly figures Monday after the market closed, a pretty strong quarter. Now, when they reported earnings, when the earnings call was going on, the stock was actually down on pretty good results. But at the time of making this video, the market is open and the stock is now up 2.2%. And so for the year, the stock is up 69%. Coincidence? I think not. So in this video, let's go over the numbers for the quarter and some comments that were made during the earnings call. I already did that for Palantir. If you missed that video, that would be in the top right corner. If you enjoy this type of videos, hit all the buttons, especially the subscribe one, as we're nearing 90,000 subscribers. So if you're new here, hit that red button. It's free. You can always unsubscribe later. And if you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, let's start off with a recent hire. So they appointed the global operations expert and Amazon veteran as new COO. And to be honest, he brings in quite a lot of experience, more than 2 decades of experience building global operational infrastructure at some of the world's most recognized consumer brands. In his nearly 20 years at Amazon, he led the acquisition of PillPack and the launch of Amazon Pharmacy, and built the operational backbone for flagship offerings, including Amazon Logistics, Flex, Kindle, Kindle Direct Publishing, Amazon Music, and Prime Video services. He also led Amazon's global COVID-19 vaccination task force, responsible for vaccinating over 1 million employees, contractors, drivers, and their families. Additionally, he held executive leadership roles at Flexport and Symbotic, bringing innovative transportation and logistics expertise and large-scale AI robotics to global retail companies. To be honest, a pretty big deal and a pretty good hire for Hims. Now, for the quarter, revenue increased 111% year over year. Yes, you heard that right, to $586 million. Net income increased 345% year over year to $49 million. Adjusted EBITDA increased 182% year over year to $91 million. Now, excluding GLP-1 growth, that was still 30% growth year over year. So yes, a lot of the growth is coming thanks to that GLP-1 offering. Operating cash flow increased 322%. Free cash flow increased 321%. So that's $50 million in free cash flow for the quarter. Subscribers reached 2.4 million. That's up 38% year over year. And monthly online revenue per average subscribers increased 53% year over year. Now, this is basically what you get if we zoom out and we look at revenue growth for the last couple of years for Hims. Quite remarkable. And look at that solid acceleration in revenue growth year over year. Yes, of course, we are lapping, let's say, easy quarters, but these quarters, well, the company was still growing over 45%. Then if we look at the subscriber growth, so since December 2019, that has grown at a compound annual growth rate of 56.3%. Last quarter, that grew 38.4%. So yes, a small deceleration in growth from the usual over 40% year over year growth that we were used to in the last 4+ quarters. But I mean, this is still a pretty big deal, and we're going to talk a little bit more about the personalization part of it later in this video. Now, if we look at the monthly online revenue per average subscriber, of course, that has grown as well. In the last couple of quarters, we actually see a reacceleration in growth. So June 2024, 7.5% year over year growth, then 24.1%, 37.7%, and now we're close to 50%. And now before looking at the guidance that they gave us, they already gave us midterm guidance. This is something that they've gave us before. They of course met and beat their expectations quite comfortably. So now we've got here 2030 revenue targets and adjusted EBITDA ones as well. They said the following: our first quarter results mark a historic start of the year. Revenue more than doubled, net income increased more than 4x, and adjusted EBITDA nearly tripled year over year, fueled by strong momentum across both new and established specialties. Given the strength of this performance and clear signals that our approach is resonating with millions of customers, we have high confidence that we can deliver at least $6.5 billion of revenue and $1.3 billion in adjusted EBITDA in 2030. Today, we serve nearly 2.4 million subscribers, and with each quarter, it becomes clear that this platform has the potential to support tens of millions over time. To reach our long-term targets, we're focused on executing across 5 key growth levers: 1. Expanding the breadth of personalized solutions and services on the platform, thoughtful expansion into the next generation of emotionally resonant specialties, elevating the precision of care subscribers have access to without sacrificing convenience, establishment of partnerships to be a best-in-class curator of healthcare services on our platform, and then a global expansion of our platform. Of course, this part already got quite a lot of attention because, well, people like to hear, okay, we are growing in one market, but we want to grow outside of our core market. In my opinion, I mean, it's still best for them to focus on the US market first because that's still quite a big market for them. There's still a very, very small fish in that huge sea. But global expansion, I mean, why not? Maybe through acquisitions or things like that could happen. Then as for the platform part of things, that's what I've been saying for the last couple of videos. A lot of people are, of course, focused or have been focused solely on the GLP-1 aspect of the business. Of course, a year or so ago, that was only a small part of the business. But the reason why you were paying the price is because you knew that GLP-1 would accelerate growth for the business. So now it has become a bigger and bigger chunk of the overall revenue. But when investing in HIMS, you are investing in the platform. You're not just investing in one specific product. No, you're investing in the platform and you're investing in, well, them being able to grow that platform and expand its offerings. So far, they've been able to do that, growing revenue and becoming more and more profitable. As of the last quarter, adjusted EBITDA margin was 16%. I'll remind you, this will be closer to 20%. Then, if we look at Q2 and fiscal year 2025 guidance. So for Q2, they expect revenue to grow around 71% year over year. Full year 2025, they expect around 58-59% growth year over year at the midpoint. Adjusted EBITDA margin of 13% at the midpoint and around the same thing, let's say 13.5% for the full year 2025. The underlying theme for 2025, still the same thing here, 85% plus long-term retention, expanding portfolio of personalized offerings, strong unit economics with payback period under 1 year, evolving models drives inherent marketing efficiencies, and weight loss revenue of at least $725 million in 2025. So, of course, a bigger chunk in 2025 than before. And they said they feel quite comfortable meeting or maybe even beating those expectations. Talking a little bit more about GLP-1, so HIMS has partners with Novo Nordisk, enabling subscribers to access Wegovy, costing $599 per month, compared to their previous $165 per month personalized options directly, which is seen as a net positive despite potentially lower margins. This partnership provides clarity post the FDA's semaglutide shortage list removal and is expected to be fully transitioned by the end of Q2 2025. While Wegovy sales are less differentiated, the collaboration is projected to boost revenue and mitigate legal risk, right? When this was announced, the stock was basically up, 20 to 30% or so on the day. Switching to personalization, HIMS has significantly invested in personalization, aiming for thousands of precise treatment using data from diagnostics, wearables, and its growing subscriber base, over 1.4 million currently using personalized solutions to optimize care. This strategy is driving substantial growth, with over 80% of dermatology subscribers using personalized solutions, contributing to nearly 50% year-over-year growth and doubling of daily offering users in sexual health, now almost 40%. To support this, they are expanding their fulfillment footprint from 400,000 to nearly 700,000 square feet and upgrading equipment. And of course, the new hire definitely is going to help them with the expansion. Now, this personalization part is probably the most important part here, because right now, of course, there still is competition, right? There still is Amazon, which I think if Amazon really wants to concentrate on that, they'll probably take a lot of the market share of the overall market. That doesn't mean that HIMS will not grow. No, the market is pretty big, so every percent here and there is worth quite a lot of money. But the fact that you add a personalization aspect to it means that whoever comes in, whoever consumes, whoever, well, becomes a subscriber and gets personalized solutions is unlikely to leave the platform to somewhere else, because here he gets that personalized solution. So he feels attached to that platform. And I think that's something that HIMS has worked on quite a lot, focused on quite a lot, and rightfully so. Because if this did not exist, then probably a lot of the bullish investment thesis would be gone, I'd say. Or there'd be less of a competitive advantage than there is right now. And so all in all, that's about it. A pretty good quarter by the company. And by the way, right now at the end of this video, the stock is actually up 9% because I do think that it did open in the red and now we've seen a nice little rebound here. So again, pretty good quarter. The company is doing exactly what it should be doing. I do think that that recent Novo Nordisk partnership agreement did help them out quite a lot here, especially when it comes to the sentiment of the stock. Of course, it didn't help them out at all for the quarter since the quarter was already over quite a long time ago. So that's about it. For those of you that do hold, do share your thoughts down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye bye.